end of November, and also actually towards the end of our podcast, at least for this year. We're going to be going on our festive season break, basically during the month of December, and we're going to be back on the 8th of January for our Global Energy Outlook Forum. And three of our favorite speakers are joining me today, and of course will hopefully be also joining me for the outlook for next year. Peter Maguire and Henning Gloystein and Yasar Al-Malki. And just in advance, thank you for joining us throughout the year to help us give this market some shape and perspective. Yasar Al-Malki, Gulf analyst at Middle East Economic Survey. Good morning. Let me start with you, Yasar. We have a few headlines this morning on our bulletin. OPEC, one of them is that OPEC faces thorny issue of how much it can pump. I mean, is it really in a stick? Because it's made its policy quite clear, and the flexibility is there or not there as we go into the new year?
Thank you very much, Dayal, and good morning to you. Yeah, I think, we have a meeting coming on Sunday, but, we do not expect really, or even the market, widely everyone thinks that, there will be no changes to the output policy. OPEC sometimes surprises everyone, but what we have seen is that they have been very cautious. They have, and they will continue to with that approach. Given the market uncertainties with the Russia-Ukraine war, peace talks, and so on. We saw this with their latest decision, to extend the additions to December and then pause them for the first quarter of next year. Was a proactive decision, helped firm up the market amid ongoing expectations of oversupply. So the group will continue to assess market conditions on a monthly basis and, will not make any changes to its policy. This is what everyone is expecting. Now, the Sunday meeting will focus more on capacity assessment methodology. So there have been a lot of meetings, on setting baselines for cuts in 2027 and bringing in a independent auditor to do that. As you know, not all members can reliably produce up to their required production levels. There has been a disconnect between real and paper barrel increases. And this has also highlighted the group's relatively limited spare capacity as well.
Do you think that the other members of the group who've had, haven't even been able to pump even their reduced quotas are now, let's say, into 2026 more willing to go along with a new set of baselines, which is going to happen ultimately? But is there more acceptance, let's say, from certain members of the group,
I think
higher or lower end?
I think it's quite a policy that has got consensus. So one of the things that that OPEC did was try to shed all of these paper barrels. So for instance, they had these 2 million barrels of cuts, and that everyone is considering as a tranche of cuts, but in reality are just a cut to the paper barrels, or all of these inflated capacities. And the other thing they did was, they focused all of their cuts into a small subset rather than the whole group. Because most of the other members, that would complicate the decision making and reaching consensus and so on. So with time, the group of 8 has become more prominent, and I think there is good consensus within that group, and good working relationships. And this is something they have actually delayed. It was supposed to be done a couple of years ago. So everyone has been there was a initial assessment as well with other independent auditors, but there should be one company that they have agreed to, and they will announce hopefully this week.
Okay, and I suppose they've been trying to manage the market in the meantime, which has been a difficult one to manage. Henning Gloystein, Head of Energy, Climate and Resources at the Eurasia Group. Henning, perhaps you can help us perhaps interpret how OPEC may what signs and signals it might use going forward. Obviously, Russia has been very much in the headlines in the market the last 2-3 weeks. The Lukoil and forgive me, I forget the other company name now. Rosneft and Lukoil being sanctioned, and the market paying attention to that actually much more than it's been paying attention to general sort of Russian oil sanctions. And now we have, of course, the peace talks that are still ongoing and shuttle diplomacy continuing. First of all, do you have faith that we actually will now reach an agreement between essentially Europe and the US on the Ukraine issue. And how is that impacting oil market sentiment?
Yeah, okay. So I'll start on the Ukraine situation. I was there a couple of weeks ago, just before the sort of the organized bombing of all its energy sector, and that's important to keep in mind. So when Russia took out the entire energy infrastructure of Ukraine, that really reduced Ukraine's willingness to compromise at this stage and to engage in any good faith negotiations. Then, of course.
It's when Reeve stops speaking that the UK gilt markets react.
I've got a bit of a background noise here.
Yeah.
Sorry.
Okay. Yes, carry on. We'll try and talk over them.
When these airstrikes on Ukraine's energy infrastructure happened, that basically that eroded a lot of willingness by Ukraine to engage in good faith negotiations with Russia. And then shortly after that, the US proposal for a ceasefire came out, which had the look of, or at least the flair of, heavy influence by Russia as well. That's when the Europeans started coming in and tried to dilute that proposal a little bit. That's now happened. So the US proposal for a ceasefire now has much stronger components that Ukraine would favor. The question is now whether Russia takes these in. So I don't think so. We don't think the Russians will take this updated proposal. We've already seen the Russian government overnight saying, like, we might reject this. And basically what we think this highlights is, at this stage, there is no real willingness by either side to compromise, because the Russians think they can advance further, and the Ukrainians think that Russians aren't negotiating in good faith anyway, so they are currently willing to fight on. And that is the problem. This is why we actually currently don't see much room for a ceasefire. However, I also have to admit that we didn't see this agreement this proposal from 10 days ago suddenly surface. So there's a lot of maneuvering going on right now, which means that we're going to have to watch those headlines.
Absolutely. Peter Maguire, CEO in Australia of Trading.com. Welcome. Peter, how are the commodities markets in general taking all this, geopolitical noise? I mean, we have the Russia-Ukraine thing, which looks more peaceful well, not really. I mean, we've had, obviously I would say I go back to Henning on this later, that, the infrastructural damage is definitely much more significant now than it has been. But how are the commodities markets reacting to that, if at all, and also even to any sort of nervousness as we end the year in the Middle East here as well, in terms of geopolitical risk, and is that being factored into prices at all? Gold is climbing again. What's happening on that front?
Well, good morning, Diala, and greetings from Sydney, and hello to all. When I look at the commodity complex, I mean, crude just seems to be in a softening stance, and we've got WTI punching just above 58, but the general theme, I think, from most traders' perspectives, is probably softer prices leading into Q1. If we roll our eyes across to gold, as you mentioned, and certainly silver's 52 and a quarter. It's had a really strong move in the last couple of sessions, and gold's back on that nudging 42. So I think that sell-off that we experienced is one of, I think, probably a little bit overdone. Crypto has been absolutely hammered, and Bitcoin's still at languishing at 87. So
how do you interpret that Bitcoin hit, if you like? It's had such a good run this year. Why? Is it end of year consolidation?
Could be many factors as far as ETF. It could be just, I think, obviously more sellers than buyers. The other side, of course, is the way it's moving. Probably a lot of fear was into the market. It was overbought at 125,000. The other side, of course, is probably margin calls, and you've only got so much firepower. Gold was hit as well on that US dollar and equity markets, and there was a degree of fear as far as and the government shutdown. So all of those factors in play. The other side, of course, is, can we believe the numbers, and what did September look like as far as unemployment? Better than expected. And CPI, and are we in tune to see a rate cut, Diala, in the next couple of weeks? I think the 10th and 11th of December are the blast-off dates. And I think consensus is still pretty much 50-50. I mean, some people say it's about 30% probability. Other people say it's about 60 or 70. Let's draw a line in the sand and say it's 50. there's a lot of water to pass under the bridge between now and then to see whether we get a better set of numbers from any perspective. Certainly with retail sales were softer, but I think the Fed's got their hands full. They understand they didn't have full transparency of numbers from a job perspective or from possibly CPI. So if we do see a rate cut, then I would feel as though that would spur on equities, and the US dollar will come under pressure to the downside, and probably there'd be a degree of, I think, a ramp up as far as gold prices. So, you're sitting at 42 now, the best part of 43.50 to 4,400, probably achievable by the end of next month. The overall momentum seems to be stronger. So maybe we're going to test those highs again, Diala. It's midstream at the moment, but I think there's opportunity for traders.
Yeah, and you were saying a few weeks ago that many are saying, we could hit 5,000 in the next few months on gold. There's just so much uncertainty out there, but also lots of headlines about the US economy, a lot of negative, people feeling the pinch. That's suddenly now coming to the fore, in terms of the man on the street, if you like, despite what's happening to equity markets, that is now the tariffs, the whole tariff thing is beginning to possibly be felt in the US economy, and we'll see what happens there in the first quarter. Yasar, just let's get an update from you while we have you on the Iraq production situation. There's been, again, positive headlines on that front, agreement with the Kurds as well on the pipelines there as well in the last few weeks, and some of that oil moving. There's a headline here, though, which says Baghdad pays up to protect 500,000 barrels a day of oil production, because of, I suppose, the pressure of possible, it says sanctions style Lukoil, and Baghdad is paying. Can you explain that headline for us and give us an update on the outlook for the Iraqi oil sort of, I suppose, capacity as we go into next year?
Yeah, thank you. If we just take last year as a baseline and go into next year, last year was quite successful for the Iraqis in terms of rekindling IOC interest in the country. Next year,
do you mean this year? Yeah, this year.
This year. I'm a bit ahead.
Yes, let's look ahead.
Next year, the big issue we have is government formation, of course. So there is a lot of risk on how the Iraqi government is going to move ahead on many of these preliminary agreements that they have reached with Chevron, Exxon, and other companies, and how they would finance many of the projects. Now, just to answer that specific bit of your question on Lukoil. So Lukoil has this field in Basra called West Qarna 2. Of course, it's 480,000 barrels per day capacity, contributes around 10 to 13% to exports. With the sanctions on Lukoil has been, the Iraqi central bank has stopped banking services to the company. Some of the state marketer has suspended some of the oil shipments. The Iraqis pay them in kind for their dues. And of course, Lukoil has declared force majeure at the field. So despite all of this, production appears to be not interrupted thus far. That payment was for Lukoil Iraqi employees because they have not been paid for around 2 months. Now, the Iraqis, what they are trying to do to resolve this is they're trying to get a 3-month waiver from the US government to explore their options, basically. Now, a waiver would postpone the imposition of sanctions to give time to arrange a sale. But the Iraqis themselves are unlikely to buy Lukoil out of its 75% stake in the technical service contract. So an important fact here is that Gharb al-Qarna or West Qarna is not a Lukoil-owned asset. It's an Iraqi-owned asset. Lukoil has a 75% stake in a technical service contract. But, the Iraqis cannot pay for this because they cannot afford it. They have to, give the company billions for its capital spending and so on. So it's unlikely that they will pay for this. Again, caretaker government, they have to put the money into the next budget and so on. So they might ask the U.S. government for leeway as they are still, there is a lot of uncertainty about what they are going to do. One option, and I will change with this, there is a bit of we'll finish with this. There is a bit of speculation that Lukoil might do what Rosneft did in Iraqi Kurdistan. So Rosneft owns a 60% stake in that pipeline that you mentioned. You mentioned exports. the restart of exports from Kurdistan to Ceyhan in Turkey. That is handled by this 900,000 barrels per day capacity pipeline that is 60% owned by Rosneft. So what we saw on 19 November is that Rosneft downsized its holding from 60 to 49%. So that's below the 50% threshold upon which, sanctions are
Ownership.
implemented. Exactly. So Lukoil might try to do the same, downsizing, but the US government gave a swift 90-day extension to the Kurdistan regional government to do this because you have US-owned oil companies that are involved in producing Kurdish oil. So it's unlikely that they will be as fast with the Iraqi government. At the same time, that Rosneft arrangement included moving the 11% to a unknown company that is registered at an address where you have other Russian or companies dealing in selling and marketing Russian oil. So that's going to be a bit problematic.
Oh my goodness.
Maybe.
I mean, trying to figure out the fun and games around that. Nothing changes in the oil industry. Thanks, Yusar.
It's very fun, actually. Yeah. Cheers.
Henning, I mean, talking about sort of pressure, I mean, on Russia, from my perspective, obviously the Lukoil sanctions and the Rosneft sanctions, can you tell us your interpretation? Why do you think Trump waited till now or till a month ago to start with that, to pressure Russia? I mean, clearly he's playing the Russia pressure game, but at the same time, not really pressuring them at all in so many ways regarding Ukraine. But also that was, that did trigger some reaction from Russia. And also, there has been, and you mentioned the infrastructural damage on Ukraine and on Russia, literally physical damage that we weren't really seeing a lot of a few months ago. I mean, won't those two factors push Russia closer to giving in? I mean, that is real sort of economic damage, isn't it?
Yes, so the economic damage to Russia over the last couple of weeks and months has definitely increased. First, as you say, with the Ukrainian attacks on Russia's oil refinery system, which basically hits its domestic fuels market. And now increasingly also on Russia's crude export facilities. So definitely hurting, but Russia is a resilient economy. I'd expect that they can take this damage longer. I have to admit, I haven't been to Russia anytime recently, and they don't publish data on this sort of stuff, so it's very hard to judge from the outside. Likewise, unfortunately, it's very hard to judge Trump's thinking. We're all in a guessing game here. Our thinking is a little bit that Donald Trump originally got fed up with Mr. Putin's unwillingness to budge at all after the Alaska summit a couple of months ago. He realized maybe that he was being played a little bit and got upset about it and slapped further sanctions on Russia. One has to also admit here, this actually triggered some response from Europe, because we know that the US has been a little bit upset about Europeans quietly still importing LNG from Russia and also some indirect fuel imports in the oil sector. So, and that actually, the US action, the tightening sanctions regime, also triggered a response from Europe. A new sanctions package was released. So India is now kind of dialing back its Russian oil purchases. So he's definitely, Trump is achieving a result here. The question is whether it's a strong enough result to nudge Russia into a willingness to act more. In fact, I find the next few days is probably quite interesting to see, sort of between today and your energy outlook on, was it 8 January? I suspect we'll be a little bit wiser. But unfortunately, between now and then, I think there'll also be a lot more fighting on the ground. The Russians are pummeling Ukraine. The Ukrainians are shooting back. They've got their own missiles now. The Germans have just said that they might be supplying more missiles to Ukraine. So actually, this December looks pretty brutal on the ground, unfortunately.
Unfortunately. Peter, let's talk a bit about China. I always like to get your perspective in terms of the influence of it on, of recent sort of demand, not just for oil, but also the commodities influence that it has as it ends its year. I mean, equity markets have improved there this year. It's had a good run. All these headlines about how it's going to it's going to beat the US on AI because of its advantage with green energy and data center energy, etc. I mean, China doesn't seem to be doing too badly as we end the year in general. The property market's still a drag, I assume, but what's the outlook going forward in terms of, from a commodity point of view for China?
Well, I look at it Diallo, I think you know, the wonderful barometer, of course, is copper, and we're sitting at around about 10,800 on the LME. If you're looking at the industrial metals, they've all been bid up and bid up quite strongly over the last quarter or so. So that's shows, I think, some resilience across that commodity sector from a base metal. If you're looking at soybeans, yes, there was concerns there from you know, for US farmers and President Trump coming to some sort of arrangement with President Xi and sorting things out on that domain. We all understand their appetite for gold hasn't waned, and the overall momentum, and that's Asians globally. And you know, they're very, very bullish, along with India. That's, you know, another you know, billion odd people that have got a strong appetite. Their stock market has performed really quite well. I think it's been very dynamic over the last 7 or 8 months. So that's a positive tone to end the year on. And I think a lot of stock markets have had an incredible last 6 months or so. Certainly look at the Japanese market, and a number of other Asian markets have performed incredibly well. Even, you know, South Korea's done quite well. So the overall momentum, one would think, would be more positive. The overhang from the property sector is still there, and that may be worked through over the coming years, but that's a big overhang, as we know. And their appetite for energy markets and energy hasn't waned really at all, because it's a big engine to feed Diallo, and that's an ongoing appetite, rolling that across naturally to steel as well, with you know, iron ore. So I look at China as it may be a place to keep certainly very much an eye on over the next quarter and leading up until mid-year of 26. But if anything was to derail, and what's the real situation as far as the tariffs, and how is that going to be implemented? And, you know, you're running at about 47 or 57%, I think was their number, that have got to be absorbed. So I still believe that you've got to look probably February to March to see the impact that's going to have on China, because it's a little bit too early to call.
And we have Trump and Xi planning to meet, don't we, in the spring? So perhaps until then it'll be calm and steady, and then we might have a couple more bazookas thrown in there. There's our question for today. Will Russia still need to offer its oil at a discount to secure Asian buyers, even if Moscow signs a peace agreement with Ukraine? Yes or no? Of course, we've seen that discount advantage, I suppose, change as the general oil price has gone down, and obviously they have the sanctions as well on top of that. That's limited intake. Yasar, I mean, of course, China took some Russian oil, but it's been taking a lot of all the Iranian oil that's been out there, really, hasn't it? Some of it's still apparently sitting on the water, because China was also beginning to comply a little bit with these US sanctions, trying to protect at least the state refiners. I mean, give us your outlook for Iranian oil as we go into the new year, and also any nervousness about the geopolitical situation there being reignited, if you like, between Israel and Iran. A few people speaking out on that in recent weeks.
Yeah, thank you. Just for the first part of the question, when it comes to China, I think China is much better well-equipped than, say, India, when it comes to handling different sanctioned crudes. I think I was looking at some of the customs data for October, and almost a third, or 32%, was coming from, you know, Indonesia, Malaysia, which is a proxy for Iran, and Venezuela and Russia. So you have the refining system in place, you know, teapot refiners, traders across Hong Kong and other places who are willing, you know, to deal with this, and the financing mechanism. So they are well equipped to do that. Sorry, that was the bit about China and sanctioned crude. Iran, yeah. So Iran
and Israel, yeah.
Yeah. So I'll just start on the part with the Iranian oil flows. You know, the Iranian sanction evasion system has really matured. It's now quite efficient for what it is. You know, exports continue to average around 1.5 to 1.7 million barrel per day this year, every month, and that is significant growth. I mean, it's around 6% growth over last year, but significant growth over the previous years. And despite the increased sanctions, the Iranian fleet the dark fleet is seeing high utilization. Few tankers are idle. Ship-to-ship transfers are now more routine, but also complex, with routes, you know, with routes flexible evade sanctions. We saw, Indonesia becoming, for instance, a major place for ship-to-ship transfers, and almost every available vessel within that dark fleet is now active. Of course, that leaves minimal capacity in the fleet, but remember, the vessels are really old, 20 years old plus,
Yeah.
so they are operated at slow speeds to reduce wear and tear and to reduce also detection. But rather than expand the fleet, what the Iranians are increasingly doing is that when a tanker is sanctioned, they take out an old tanker and replace it, and also look at bringing in a new tanker. So vessels are spending more time at sea, carrying more oil rather than waiting between voyages. They also are spending less time being anchored. So, and this is, the Iranian playbook. It's quite mature, and this is something that the Russians might want to replicate to evade the stricter sanctions on them. Now, on the Israel-Iran side of things, I think Iran is in a very weak geopolitical situation versus where it was a couple of years ago. Iran is looking more internally. I think the whole policy of having outside defense or proxies in the region to defend the Iranian heartland has proven to be quite costly and and has failed. So the Iranians are looking inward. There are some big changes being done within the security establishment, and also some cultural changes. I think one thing that not many are focusing on is how the Iranian government is trying to promote patriotic and unitary, ideas within the Iranian society, also giving a bit more freedoms. So I think with Israel, Israel still has the upper hand, as we saw with the attacks on the Hezbollah commander in Lebanon this week. But, triggering another wide conflict with Iran might not sit well with the Trump administration. The Gaza ceasefire is shaky. The Arab allies of the US are not very keen on seeing more disturbance. And I think that was a key message that Crown Prince Mohammed bin Salman delivered in Riyadh, and also others.
Well, thank you. So let me go to Henning with that. I mean, yes, the question is, will Israel listen to the US? It didn't last time, apparently. And let's see what happens. Henning, I wanted to get your point of view on the recent visit with the Crown Prince of Saudi to the US. Big fanfare there. But, from an oil sort of energy relations point of view, the headlines were, it's no longer about oil, it's about tech, and it's about, huge AI investments and data centers, etc. A lot of people saying the relationship is shifting to an extent. But, just give us your perspective on whether you do think there is a new shift in that relationship, and also bring in what that means for regional security for Saudi Arabia, especially with regards to Iran, which is obviously something that it's been trying to guarantee and re-secure as well.
There's definitely been a shift in relationships between the US and Gulf, and particularly Saudi Arabia, but also the UAE. And for those two, things have improved massively. And when Mohammed bin Salman visited DC, it was a fantastic visit for him. All past concerns were literally brushed off the table. And this is, in the defense sector, Saudi Arabia is now looking to probably get US F-35 jets. There's a defense pact being signed on the data and AI center. Those two look like they're huge benefactors with deals from the United States, and Trump and his closer circle, family and friends and business partners, everything. So it's a massive move together for and which will benefit Saudi Arabia and the UAE hugely, we think. Oil is less in the headlines in terms of cooperation between these partners, but it's still there. Trump, this is no secret, he wants low oil prices. The Saudis, obviously, in an ideal world, would like higher oil prices, but that's the reality they have to face. It's a better relationship with Trump, with the United States, but it comes with all the benefits that I just laid out. And the downside is that oil prices will probably be lower. I think Saudi Arabia and OPEC as a whole they have realized how resilient US production is. I mean, US output just hit 13.8 million barrels per day,
Yeah,
despite
that's
the
a
fact
new
that
high,
OPEC
isn't
is
it? Well,
absolutely.
not a new high. It hit 14 before in the previous years, but yeah, recently.
Yeah, no, but it's pretty remarkable, and it's a resilience that a lot of people doubted the US output industry would have. They're good at this, so we're going to have to live with a lot of oil. For consumers, this is good. It probably means oil price will be relatively low for the next year or three. And for producers, it's a little bit more painful, but it comes with overall net benefits for Saudi Arabia, the UAE, that is almost certainly going to strengthen them. In terms of stability with Iran, unfortunately, we just hear Yasar. He mentioned a few incidents very recently. There's a high risk of more to come, and whether the Israelis listen to anybody at this stage is I don't know, doubtful.
Okay, well, let's see what happens. Thank you very much, Henning, and to Yasar and Peter. There's the response so far, 75, 25. We'll get some more takes on that as we go through the day. Thanks so much, Antoine, and thank you again for your contributions in 2025. We will not be seeing you again this side of the year, but wishing you a peaceful end of the year, and look forward to seeing you in January.
Thank you.
All the best.
Thank you very much.
Same to
Thank you
and
so much.
Bye,
Thank you
Henning.
so much.
See you,
Bye-bye.
Yasser.
Bye. See you.